Hey, doing good. How you doing?
Doing good, doing good. Where are you based out of?
I'm in Boston.
Boston, okay. I'm in
How about you? Where are you at?
Fresno, California, Fresno
Oh,
area.
okay, nice. Nice. I saw you were on the last call. I watched the replay.
Uh, Oh man,
How's it going?
have you been in business for a while?
So I've been learning about like the wholesaling and everything. I just right now I work full time in accounting. I'm a
Oh,
CPA, but I own so Boston's more expensive. So I own like two multifamilies, but they're residential, like a 3-family and a 2-family.
nice.
So that's pretty much it right now. How about you? So you do, what do you do? The wholesaling, or you flipping, or you do everything?
Primarily flip. I've been trying to move into wholesaling, but it's a mind shift.
Yeah, it really is, definitely. Yeah. I have a bunch of courses and everything. It's just that I'm so busy with my job, so it's been tough to just jump in and do it.
Indeed.
So that's where the virtual assistance thing was interesting. If I could get that up and running too. How's it going with you with the employees? So you have like 20 employees?
Yeah. I'm ready. I'm ready to downsize.
Yeah. Hey, how's it going? Take it, it's not Chelsea, right?
No, it's Andrey.
Nice.
I guess I have to get my own Zoom account. I guess I'm using my wife's Zoom account.
Yeah, it looks that way.
Oh well. Is there a way to change the name? Oh, rename. Yeah, rename.
Yeah, there is in the settings.
There you go. I'll rename myself. There you go.
Yes, there you go. More fitting of you.
Mm-hmm. It works.
Can you guys hear me?
Yeah, loud and clear.
All right. Got a few people on. That's good. Probably have some more joiners here. All right, good. People are still joining. You guys, this must be an exciting episode for you guys. Learn about some bank financing.
Most exciting one.
Good. David Bader's on.
What's up?
Yeah, Matt Lansing's calling. You might hit the pause.
Oh, that's somebody else.
I disabled it.
Can I mute everybody? Yeah, at some point, mute all, just hit that.
Can you individuals or can you all?
Okay, I'm gonna give it a couple more minutes for some people to jump on, just because there's a lot of people jumping on right now. Everybody can still hear me, right?
Yes.
Good. Yeah. Thumbs up. The only reason I keep asking that, guys, I don't know what it is. I have had, I've got the most powerful internet you can buy in our area. We got fiber being installed, literally, I think it's going to be coming any day, right? Mm-hmm. And so they spray painted the yard for the fiber that's getting ready to come in. But for whatever reason, our internet has just not been stable lately. So I actually just pulled off the internet and onto a hotspot on an iPad. So hopefully that makes me worry about that. So this is going to be a pretty exciting little lesson we're going to go over. We're going to have a lot of cool stuff to cover. Tyler, should I make it so I'm the big screen here? Or? I just want to be able to make sure I can see everything on the whiteboard in case I use it. Okay. All right, I'm going to give it 1 or 2 more minutes here, you guys. We got a ton of people jumping on right now. So 2, 4. Cool. A lot of familiar faces there. You guys want to learn about bank financing today. That's good. We'll give it 1 more minute. We'll jump and get started. You guys make sure I'm sure everybody's got a pen and paper. We are recording this, right, Tyler?
Yep.
Okay, this is recording, but if you, hopefully you grabbed a pen and paper. This is going to be one of those ones that you should take a lot of notes on, just because we're going to be covering a lot of cool stuff. So, so make sure if you don't have a pen and paper, go get a pen and paper and get ready to write some notes. Oh, yeah, we got a lot of people on here. That's good.
Hey, Matt, how you doing?
Hey, good. How are you?
Good.
Good, good, good. All right, guys, I'm going to go ahead and get started here. We might have some people jumping on. We got a few messages. People are going to be a few minutes late and whatnot. I'm going to go ahead and mute everybody. So I just muted everybody. If you have a question, they can unmute themselves, right?
Yeah.
If you have a question, you can unmute yourself. We're going to do Q&A at the end, so hopefully just kind of let me get through it. And but if you have something you just, you know, you can't wait for to get an answer on, just send me or say something and we'll get it figured out. So we're talking about bank financing. You know, we're going to cover head to tails, like everything you need to get bank financing. We're going to talk about some unsecured lines of credit. So fun stuff. I was creating a whole product on this whole subject. And then we got so busy with everything else, I never actually released it. I didn't really even finish it. We've created so much stuff over the last few months, just taking what we've already built, that you know, we've been keeping you guys busy enough. So I want to get started. So first of all, one of the most important things when you're looking for bank financing, one of the most important things that you can do is build a relationship. Okay. You know, it doesn't matter if you're talking to a bank that you want to get mortgages from. It doesn't matter if you're looking for lines of credit. You have to build a good relationship with that banker. Find a specific banker. And what happens is I do business with bankers. Well, first of all, backing up, I've had over 2,000 bank loans in my 15-year career. It's probably closer to maybe even 3,000. It's a lot. It's been up there. And, you know, I build relationships with every single person that I do business with, to the point where I want to be able to send an email or make a phone call, and I have everything I need very, very quickly. Let me tell you how, you know, you always hear lots and lots of things about what people are doing with bank financing and what's allowed, what's not allowed. But let me tell you that a lot of it comes down to the relationship that you build. If you get a track record that, you know, that gets really, really strong, and you've got, you know, just this amazing track record of always paying back your loans, and you pay them back early. Early is not always best, but, you know, when you're paying them back early and, you know, paying off loans quickly, a lot of times that goes a long ways with a lot of banks. So having a good relationship is very, very important. Now, with that being said, you can build that. You know, building a relationship takes time in a lot of cases, but also, you know, you can do it quickly if you look intelligent and you ask the right questions and you say the right things. And after you go through the next hour, you're going to be armed with that information. I've helped so many people over the years with simple, very, very simple things to say and ask bankers that made all the difference in the world. So we're going to cover a lot of that today. So, but the overwhelming thing that I want you to keep in the back of your mind is you must build relationships with bankers. They must like you. They must want to do business with you. They must want to be excited every time you text them or call them. So just keep that in mind. Working with banks can be frustrating at times if the banks are slow. Right now, you know, you have a lot of people complaining because appraisals are taking a long time. That's not the banker's fault in a lot of cases. But don't get too ramroddy with bankers. Don't get too aggressive. And any of you guys that have taken the DISC test, I'm really big on the DISC test. Everybody in my company takes it. Anybody we hire takes it. Even our virtual assistants take the DISC test. You know, if you're a high D, you know, you can you can accidentally trample over somebody and they don't like you anymore. So you've got to be careful when you're working with bankers. Don't get too ramroddy. Don't force them to do things that are impossible for them to do. But you have to be stern and also get the work done that you need to get done. So you can take years to build a relationship and in minutes destroy that. So just remember that. One thing is that's really important is building that relationship. Now, I want to talk about how to really impress a banker, how to build an interview that impresses the banker. So let's talk about a few things. One is, let's talk about what a banker wants to see. I know a lot of times people, you always hear the term net worth, right? Everybody talks about net worth, and you always, if you're on TV, or you see, you're watching a television show, that talks about anybody's wealth, they always talk net worth. Very, very rarely will you ever hear anybody talk about liquidity. Sometimes you hear somebody, you hear the terms cash flow, but you very rare the term liquidity. Now, I'm going to tell you guys, net worth, if you talk to 9 out of 10 bankers and you brag your net worth, man, my net worth's $1 million. My net worth's $5 million. My net worth's $10 million. But you have, if you're worth $1 million and you have $5,000 in liquid cash in your bank account, that's not good. That is not something to be, you don't want to be talking about your net worth when you're sitting on almost no liquidity. So, and it's worse, the more higher your net worth goes, if your liquidity is very, very low, that's not a good situation to be in. So first of all, you should be focused on building your liquidity. I've done a lot, my thousands of bank loans over the years. I've done a lot of talking to bankers in order to get those loans, and I know what bankers want to hear, and then I know what they want to see, and I know what happens when they take that approval to the board. Every single bank's got an internal loan committee. They call that the board. If they take that to loan committee, and they're trying to get a loan put through, and they don't know who you are, or they've never done a loan with you before, and your liquidity is strong, there's a very good chance you're going to get that loan. I remember, I don't know, maybe 7-8 years ago, I think it was the first time I ever hit, I had hit over $1 million in income for the year. And that's not a made up number. That was actually what I paid taxes on. So that was my income after taxes. I paid taxes on $1 million. I had over $1 million in the bank. And my banker, who does bank loans up to, I think, $40 million loans personally within that bank, he mentioned that was so unusual. He's like, I just don't know many people that have that much income and that much liquidity at the same time. He's like, nobody ever has liquidity. And people come in here and they ask for bank loans, and we're like, their liquidity is so low that we just don't feel comfortable giving them a loan. He told me something, he said something to me that blew my mind. He goes, Matt, there's a guy right now that, he didn't mention any names. He wasn't revealing anything that would be damaging to anybody, but he said, there's a guy that came to me. He's got a $20 million net worth, and the guy had less than $20,000 in cash. And he's like, it's just so normal to see that type of thing nowadays. So one of the most important things I can tell you guys to do is build your liquidity. It's one of those things that I hear so many gurus on TV, on the internet, on Facebook, on Instagram, on everywhere, that talk, cash is trash. Don't have cash in the bank. If you have cash in the bank, you're stupid. I mean, how many of you guys have heard this type of thing? Like, so many of these gurus are telling you not to have cash. And it's so weird for somebody like me, who's a real estate investor, who I do real deals, and a lot of them all the time. Every month we're doing just tons of deals. I just can't imagine a world where if I didn't have liquidity, I just don't know how I would get any loans. And so, so when these people when they go on a podcast, or they go on YouTube, or they go on the internet, social media, and say, hey, you're stupid if you have cash, cash is trash, I just don't think they're real. I don't think those people are doing any real estate deals. It's just not possible. They're either lying to you, or they're telling you the opposite of what they're doing. Maybe they're trying to sell you something. I don't know, but it just can't be real. So step number one is you have to focus on your good percentage. I'll ask my bankers, I'll see for liquidity, and always that 5% to 10% of your net worth in, if you have 5 to 10% of your net worth, hopefully 10% or higher, higher the better. If you have that in liquid cash, then that is ideal. So think about that. That means if you have $1 million, so Tyler said repeat. I don't know what you want me to repeat, but for net worth liquidity, if your net worth is $1 million, you would want to have at least $50,000 to $100,000 in liquid cash. That's called liquidity. That term is what you'll use when you talk to a banker. Now, some of your guys are saying, man, I'm just getting started. I don't have a lot of cash yet. I get it. Guys, 15 years ago, I was a machine shop worker. I had $700 in my bank account. I had over $20,000 in credit card debt with no chance of ever paying that off unless I got into something else, which luckily I got into real estate. But you can make a lot of money really fast if you have the right strategies, and you can change your liquidity. So it's not difficult to build 50 to 100 grand in liquidity if you're doing wholesale deals, if you're doing fix and flips. So first of all, I want you guys to set a goal. I want you to figure out, so first of all, know your net worth, okay? What is your net worth? Your net worth is just simply if you took all the things that are valuable in your life, whether it be your houses that you own, you have cars, if you have watches, if you have life insurance policies, if you have cash, if you have precious metals, anything that you own, take that number, add it up, whatever it's worth. If your car is worth 50 grand, whatever, and then you subtract out what you owe on each of those things. Well, I've got this Rolex and I don't owe anything on that, because, by the way, if you ever get a loan on a Rolex, you got some work to do on. Don't ever do that. But I have got this Rolex. It's worth $50,000. I don't owe anything on it. So that gives me a net worth of 50 grand. Or I own this car. It's worth $50,000 and I owe $20,000 on it. Okay, well, that would mean you have a net worth of $30,000. I have 100 grand in the bank. Okay, that's $100,000 for your net worth. So you add up all your assets, subtract out your liabilities, and your liabilities are simply the loans that you have against stuff. Then that is your net worth. So if your net worth is $100,000, then you should have $5,000 to $10,000 in liquidity. Now, you don't build liquidity overnight. It takes a little bit of effort. It takes a little bit of time. But with the one good year can change your financial position. So focus heavy. I want you guys to focus heavy on liquidity. Write down the word liquidity, and then you're going to circle back to liquidity and figure out what you need to do to build that to 10% of your net worth. Now, the higher you go, the better. Every once in a while, I'll talk to my banker and they'll be like, whoa, man, this guy over here, they won't mention names, but they'll say, I can usually figure it out because I live in a pretty small town. But they'll say, hey, this guy here, he owns 100 houses. They're all free and clear. His net worth is really high, and he has X amount of dollars that in liquid cash. So you'll hear bankers brag about those types of people. So your net worth is the least and more. So let's back up. There's three things that your banker cares about. One is liquidity. 2 is net worth. We've talked about both of those. And the third one is cash flow. It's your income, okay? So you could have so if I had to rank income, liquidity, and cash flow, income, liquidity, and net worth would be at the bottom. So net worth is the least important thing of your financial picture. This, I would say the most important thing is I would probably have to put, it's tough. Some bankers say liquidity, other bankers say income. I would put income at the top. So if you focus on your income, take that income and turn that into your liquidity. Don't spend everything. And then take that and then work through your net worth. So focus on high income. How do you focus on income? Well, you wholesale, you flip. Some people might say, well, yeah, you do rental properties. No, that is a long-term strategy. Rental properties will not make you wealthy fast. It's a slow-term deal. You're talking, it's a 10-year plan to really make it work really, really well, because it takes, looks like we're having some issues with the internet here, but I think it's back on. So rental properties is a long-term wealth strategy. It's not short-term. So rental properties is not a short-term way to, take your income up. Why? Because if you buy a rental property, you put money down on that property. So that takes away from your liquidity and turns it into long-term cash flow. So rental properties are something that everybody should build given enough time. But in the short term, the things that will make you rich are cash flow, or flipping houses, retail flips, or wholesaling. Personally, I love wholesaling. The return on investment is higher. So remember that. So we're going to back up and talk about. Okay, so let's back up. Just quick note, because my internet kind of flickered there. Income is most important. Next is liquidity. Third is cash flow, or net worth. So income, liquidity, net worth. Okay, so now let's talk through how to.
Do you include stocks, like your retirement accounts?
That would be considered. That's basically considered liquid cash. So if you have. Yeah, if you have a stock portfolio of, you own Apple and you own $1 million in Apple, you can convert that to cash really fast. So a banker would look at that as liquidity. Yes, and sometimes that's not a bad place to store cash. So as long as it's stable and long term and everything else. Okay, so let's do this. I'm going to go through now that you know what's important. You know how to have a conversation with bankers, okay? Don't go into a bank and be needy, okay? The worst time to get a loan is when you need it. And it's just the opposite. It's like, man, I really need to get a loan right now, but I think the banker can feel that I'm kind of needy. So don't do that. So we're going to talk through how not to do that. So first of all, now you know the terms that you should be talking. When you get to a bank, if you've got a strong income, talk about that. Hey, I got this W-2 job. Hey, I wholesale, 50 houses last year, and here's my tax return. Hey, I've got this amount saved up, whatever. Talk about what bankers want to hear. Secondly, don't brag about a high net worth if you're, don't talk about a high net worth if we got a question here. I gotta bring that up. Don't talk about a high net worth if you don't have any liquidity. Okay, so are you counting mortgages on rental properties against your net worth? Yes. So if you have a property, it's worth $100,000. This is, by the way, that's a really good question, because here's the thing, guys. So the question is, are you counting mortgages on rental properties against your net worth? Here's why that's a good question. This is why I don't like net worth. Let's say you have a house, it's worth $100,000. And you have a mortgage on that house of $70,000. What's your net worth, right? Well, you say, well, man, I just take $100,000 minus $70,000, my net worth is $30,000. It's not actually accurate, because what happens if you had to sell that? If you had to liquidate that net worth into liquidity, what happens to that? What's the process? Well, you'd have to hire, could you sell it on your own? Well, maybe you could sell it on your own. But in that case, you're still going to have closing costs. But what if you need to list with a real estate agent? They want 6%. Plus I have closing costs. That's 1% to 2%. So what if I don't get 100 grand? What if I only get 95,000? Well, that took off another 5%. So that's why net worth is usually inflated, because nobody includes onto net worth the cost that it would require to convert that net worth into liquidity. You're going to have to pay a real estate agent potentially to sell it. You're going to have closing costs. You may not get the full market value. And what if it's been a rental for 10 years and now it needs cleaned up and updated? What if that's $10,000? Well, okay, so that costs money too. So that's why you have to be careful with net worth and talking about what it's really worth, because there's an associated piece that goes with liquidating that asset. So let's talk about this. So now I'm going to get down to some good questions here that you can use to talk to bankers. So first of all, when you talk to a bank, how to find the banks that are lending. One thing that you can do is I have a couple strategic ways to find banks that are lending, and I have a couple ways that are a little more shot approach. But let me just paint the picture for you really quick. And do you guys remember when in 2000, maybe you guys remember this, maybe you don't, but remember how in 2006 everybody was like getting loans, no money down loans, and were able to just basically get money without putting money down, and they could buy properties. You guys remember all of that? Well, guess what? If you have a good relationship with the bank, then you don't have to put money down. When I buy a house, if I buy a rental property for myself, I don't put any money down on it. I literally tell my banker, here's what I want to buy, and they don't require me to put any money down. Sometimes they even fund my rehab costs at closing, all money up front. That's the power of having a relationship. So that's why that part is so important. So if you guys think that those loans went away, they didn't. They're still out there. For me, if I had a banker tell me today with my balance sheet, if I had a banker tell me like, hey, Matt, I'll fund you, but you got to put 25% down, there'd be no way. I just go to a bank. So that stuff exists now, today, everywhere. You can get those types of loans. So, but you have to have you have to be able to build the right relationship. You have to have the right balance sheet, to have a conversation. Banker has to know what you're doing. But you have to start with the banks that will do that type of thing. If I went to some banks where I'm at and said, I want a no money down loan, they would say, absolutely not. We don't know who you are. So you have to make sure you find them. So here's what you're going to do. Here's the shotgun approach on how to find the banks that will lend. One, you're going to do something super simple. And some of you guys may have heard me talk about this in the past, but it absolutely works. You're going to go to yp.com, yellowpages.com, and you're going to do a search. Now, when you do this search, you are going to put in the two boxes will come up. One box is going to ask you what you're looking for. The other box is going to ask you where. So you're going to put your city, wherever you're buying property. Okay. If you're buying property in Florida, but you live in Michigan, you're going to put in Florida, whatever city in Florida. So Tampa, Florida, let's say, if you're buying in Tampa, Florida, and then in the other one, you're going to type in bank. What's going to happen is a whole bunch of banks are going to pop up, and guess who gets the front page? All the big banks are going to get the front page. They pay yp.com the most advertising So you're going to go all the way to the back. You're going to go to the very last page. So if 50 pages of banks come up, you're going to click over to the last page, and you're going to start from the back and work your way forward. And you're going to write down every time you see a bank name that has the word community bank in it or credit union, you're going to write that bank down. You're going to write down their phone number, and you're going to write the name of the bank down. If you notice that there's only a couple of branches, that's even better. I like the small community banks. They're the ones that there's the ones the easiest to build a relationship with, and they're the ones that that have the most friendly lending terms. They keep those loans what they call in-house, okay? You're looking for in-house loans, okay? So again, you're going to start at the very end, the last page, work your way forward. You're going to go all the way through and write down every single bank that's got community in the name, or you notice there's only 1 or 2 branches. You're going to write down their phone number, and you're going to write down their name. Now, once you do that, you're going to call the bank. So get all the names. You're going to set up, just do this all in one fell swoop. You're going to get, then you're going to get on the phone, and you're going to start calling the banks, okay? Once you get on the phone, you're going to ask whoever answers the phone, it doesn't matter. You're going to ask to speak to a commercial lender. Is there somebody there I can speak to regarding a commercial mortgage? That's what you want. You don't want to talk to a residential mortgage person. Some of these small banks, they're one and the same. The same guy that does the commercial loans also does the residential. But you want to talk to a commercial mortgage broker. Now, so then that person's going to get on the phone, and you're going to simply tell them really briefly. You're going to say, just introduce yourself very briefly. Hey, my name is Matt Larson, and I have a few questions for you. So sometimes I'll say, hey, I just want to verify I am talking to the person in charge of commercial mortgages, correct? Yep, that's me. I handle all commercial. Okay, great. My name's Matt Larson. I have a few questions for you. I want to get, I'm potentially looking for a loan on a property, but I wanted to ask you a few questions first to see if it would be a good fit. So if you notice there, what I'm doing when I ask that question, I'm qualifying them, okay? The tables get turned. Now I'm calling them to see if they would qualify to work with me. Do you guys, can you kind of see that? Do you see how that changes the posture of the conversation? And now it's their job to sell me. Why should I work with you? So then you usually almost hear it in their voice. So, oh, okay, well, yeah, go ahead. What kind of questions do you have? And here's the questions I like to ask. I'll ask them, first of all, I'll say, does your bank deal with, do you keep the loans in-house? Do you resell them to Fannie Mae or Freddie Mac, or do you keep the loans in-house? Sometimes they're called portfolio loans, but other times they're just called in-house loans. So why is that important? Well, again, if you have a portfolio loan or an in-house loan, that loan does not have to meet the standards of Freddie Mac and Fannie Mae. And the reason that's important is because you don't want to follow those guidelines. To be able to get a loan with Fannie Mae or Freddie Mac is sometimes difficult, especially now. I don't even know what some of the new rules are since COVID-19 hit. A lot of Fannie Mae and Freddie Mac are changing a lot of the rules. It's much harder to get qualified. So do you have any in-house loan products? And if they say, yes, we do, just tell them to explain what they have. Are they 5-year, 5-year term mortgages, 10-year, 7-year? What's your interest rate? Ask them about those loans. Tell them to, teach me about what loan products you have. So that's real, so that's step one. If they don't have any in-house loans and they say no, then typically I move on from there. Because if I want to deal with Fannie Mae or Freddie Mac, I just would rather not. So here's another thing too, you guys. I hear this a lot. Fannie Mae, you can only have, I think, 10 mortgages with Fannie Mae, and then they cut you off. Guess how many loans you can have, in-house commercial loans, what the number is. It's unlimited. You can have as many as you want. There's no limit. Okay, I own a couple hundred. I own like 250 rental properties right now. I typically keep mortgages on almost all of them. And, you know, if you were to pull my credit report right now, not one single one of those loans would pull up on my credit report. And I have an unlimited amount. Okay, so that's the beauty of commercial loans. One, they're in-house, so you're dealing with a relationship and not just some mathematical calculator that tells you if you're approved or not. Two, they don't show up on your credit report. And why is that important? Well, if you have as many, imagine if I had 250 mortgages in my name, you realize how bad my credit score would be of 400. It would be terrible because that's too much debt against my name. So even it doesn't matter if every one of those properties had $100,000 in equity, it still would kill my credit score. And the reason how I found that out is because that's what happened to me. I was when I first started really ramping up my rental portfolio 14 years ago, I was putting all these mortgages and they were reported to my credit score, and my credit score, which I was making on-time payments, never missed a payment. I mean, all that stuff. My credit score kept going down every time I got a new loan. So you don't want those loans that are reported to your credit, which are typically Fannie Mae, Freddie Mac loans. So I like the in-house stuff. It's not reported to your credit. That's what's amazing. It's a relationship, and they can get creative for you. They can build whatever they want. So a commercial lender, now they do have to follow some guidelines, but they can basically do whatever they want for you. So again, you ask them what they have, any details that they have, on those loans. So, okay. So now the next thing I like to ask them is if they have any seasoning requirements. What seasoning means that how long do you have to have the loan? How long do you have to own the house before you can refinance? Why is that important? Well, if you buy a house for cash and then you want to refinance it, and the bank says, well, wait a minute, you've only owned this house for 6 months and we have a seasoning requirement of 1 year, then they won't let you refinance the house. So, that's an important piece, especially if you're buying and refinancing and using that strategy to build up your portfolio. So I like to make sure that there's no seasoning requirements. If they have seasoning requirements, I move on. So a lot of times what I'll say, if they say, well, yeah, I like to verify this one thing. So if they say, no, we don't have any seasoning requirements. So I say, okay, so if I paid cash for a house last week and I want to refinance it this week, you'll let me do that. Oh, well, no, you gotta hold that house for 6 months. Well, I just asked you if you had any seasoning requirements, so that's why over the years I've just figured out what bankers say to me. And so sometimes I ask the same question 2 different ways. So I like to ask them that. So if I paid cash for a house last month, can I refinance it this month? If that answer is yes, no problem. Okay, great. We move on. Then I like to ask them what kind of loan to value they lend. Okay, so kind of loan to value, LTV. And so I like 80%. Okay, 85. I'm getting 80% loan. 27. Looks like the internet was kind of struggling for a second there. So 80% is kind of the magic number for me on a loan to value. And so if they're much lower than that, if they're at like 65% or 70% loan to value, I'd probably put them in the bottom of the pile. Okay. I like 80%. So then this is another really important question. If are your refinance loans, Yeah, I know, guys, we're kind of struggling. It's storming really bad here. I don't know if you guys can hear the thunder or not, but my internet's kind of in and out, so I apologize. So anyway, I like to ask, you know, when this is really, really important, you want to make sure you write this down. When you refinance, are your refinance loans based on purchase price or appraisal price? Is your refinance loans based on purchase price or appraisal price? The reason that's important, I'll give you an example. One time I bought a house. The house was worth $100,000. I did a really good job. I'm good at marketing. I'm good at negotiating. I bought the house for $10,000. So it's worth 100, bought it for 10. I go to refinance it and pull some cash out. And my banker's like, well, wait a minute here. You know, I'm interviewing them. Okay. 80%. Okay, great. And then we go to do the loan and they're like, hey, you paid $10,000. So the most we can do for a loan for you is $8,000. I'm like, what are you talking about? Well, yeah, but you purchased it for 10 and we based on, yes, your appraisal came in at 100, but we base it on purchase price. So we can only do a loan for $8,000. I'm like, well, that makes no sense. So you're saying if I was been good at my job and I paid way more for the house, you would lend me more. Think about that for a second, guys. So if I'm good at negotiating, if I wasn't good at marketing and I paid $40,000 for the same house, you would give me a loan for $32,000. But because I'm really good at what I do, I bought the house for $10,000. You only give me a loan for $8,000. Yes, correct. Think about how stupid that is. So you've got to make sure when you do a refinance loan, you've got to make sure that it's based on appraisal price. Okay. Now, I ask them. Then I kind of like to get a verbal confirmation from them on how long it takes them to turn around a loan. Again, every single question I'm giving you is just from years and years of experience and frustration, because I'll interview a good banker and then they tell me all these things and then I forget to ask a question and then all of a sudden it's a nightmare situation. Like, for example, I interviewed this has happened multiple times over the years, but interviewed a bank and everything looks good. And then we go to start a refinance loan and like 3 months in, I'm like, hey, why isn't this thing completed? Well, Matt, we're backed up and we just, because of these rules and that rules, and it just takes a long time. We just close in about 90 days. I'm like, well, that doesn't work for me. So you want to make sure you ask up front, how long does it take you right now, current situation, how long does it take you to close a loan once we get started? And get an actual time from them. Get a timeline. Make them verbally say an answer. Well, we're about 45 days. Okay, great. At least I know what I'm working with up front. That way, if it's 45 days and they're not ready to close yet, you can have a conversation with them. So another question that I want you guys to ask. Now, this next question could change your business. This is a powerful one. This is why relationships are so important. I ask, what is the maximum loan limit that you can personally authorize without taking the loan to loan committee? What is the maximum loan limit that you can personally authorize without taking this loan to loan committee? Why is that important? Well, I'll tell you why. So if you find a banker and they can personally approve up to $250,000, which seems to be a lot of times it's the magic number. I always hear between 100 and 250,000. And they can personally authorize that amount. Then that means that they don't have to go to the board. They can do whatever they want. So if you went to a brand new bank and said, hey, what's the, everything is going good. The conversation's flowing. They can tell you're sharp because you're asking really good questions. They like you. You're building a relationship very quickly because you're asking these questions that I'm telling you to write down. And then you say, hey, out of curiosity, what's the maximum loan limit that you can personally authorize without taking it to the, loan committee. Oh, I can do $150,000. So then what you could do, this is a very powerful way to get unsecured lines of credit. So you could then at that point, you could say, hey, here's what I'm looking for. I'm looking for, I want to do a $100,000 mortgage on a house that I paid cash for, or I want to do a mortgage on a property, or I want to buy a property. So that'll be about $100,000. But then I want to take and create a $50,000 unsecured line of credit. Now they can approve that without ever going to loan committee. So you could set up an unsecured line of credit. If that guy likes you and feels like you're going to pay him and pay him back, he could set that up. If you called enough banks, you could start getting those lines of credit set up. Now, if you have 50,000 or 100,000 or 500,000, whatever it is, if you had that set up, now you pay cash for properties and you're using the bank's money to do it. So that's a very important question. I always find that out. Now, you don't have to ask it on that phone call. Sometimes it's better to call back. A lot of times I'll get through these questions and I'll finish up the conversation and say, hey man, I really appreciate your time today. You've been very helpful. I can tell you know what you're doing, and we're going to do some business together for sure. Let me put together a deal or two that we can work on, and I'll get back in touch with you. That's how I usually end the conversation. One other question I like to ask too. Now you could scare the bank by asking them this, but I like to ask the question. I say, well, hey, how much? What's the bank's personal maximum loan aggregate that any one borrower can borrow with the bank? Well, we were at about $4 million. And I like to ask that because I move pretty fast, you guys. It's kind of a fun question to ask anyway to see what kind of money they have to lend. But it basically tells them that, hey, this guy could, he can find out how much he can borrow. So that's important. Now, jumping back to that question I just said with what they can personally authorize, here's one thing to remember. If you want to set up an unsecured line of credit, then you have to set it up front. Where most people mess up is they don't ask for that up front. They've already gotten loans. So if a banker has let's just use easy numbers. If a banker has $100,000 that they can personally authorize without taking it to a loan committee, that means that if you have no loans with them, he could do a $100,000 unsecured line of credit if you talked him into that and he likes you and you built a relationship. However, if you went to that bank and got a loan on a property for $100,000, you could never go back and get that unsecured line because you're already over the limit of the bank. It's not per occasion, it's per total. Does that make sense? I just want to make sure you guys are clear on that. So Tyler, if it's 150K per loan transaction, or no, it's 100. It's not per occasion. It's total. So you want to set up, if you're going to set up an unsecured line of credit, again, I'm going to repeat myself. This is really powerful stuff. This can change your business. This could literally put you into the point of being able to pay cash for properties. Is if you go into that banker and you ask him what he can now notice that I have that question at the very bottom. Like I'm not asking that up front. I'm asking him all this other stuff. I'm building the relationship. I'm working up to the important question. What can you personally authorize? Well, I can authorize $100,000. Okay, so you call him back a day later after you finish what I just told you, and you say, "Hey, I want to set up an unsecured line of credit for $100,000." If he authorizes that, you're set. That's set forever. Now, when you go to get a loan with that bank on a property, let's say, that goes to loan committee, not the unsecured line. Does that make sense? So it's really important that you understand that distinction. I'm going to open it up for some questions because we just covered a lot of stuff. Anybody want to ask me anything I've discussed thus far? Are they skittish to give out lines of credit if it's your first account with the bank, but you have good financials? It really depends on the bank. It depends on the banker. If the bank, here's the thing, you guys, these guys, a lot of times they have quotas. They have to give out X amount of loans, or they get fired. You know, their job is to give loans. And some people are conservative and some people aren't. You just don't know. But if you've got good financials and you ask for a line of credit, and you ask for $100,000, and he has one day to book another $100,000 in loans to hit a bonus, he's probably going to give it to you. Does that make sense? So, sometimes it's timing. Anybody have any questions at all on anything I've covered, or am I just doing that detailed of a job?
I got a question.
Yeah.
Can you hear me? Do you recommend giving the amount, like the $100,000? I'm actually waiting on my banker to come back with a line of credit. Do you recommend just like asking for a certain amount, or waiting to see what they come back with? I have like six or eight loans with them.
Yeah, I ask for the amount, and I go higher than I need by double. Okay. So if I was shooting for $100,000, I would play it off like I need $2.
Gotcha.
And I would just say, hey, I always remember, you guys, they're people are reading you. These bankers are reading you. They're trying to feel you out. Okay. So I'd say something like, hey, you know, one of the things I'm looking for right now, I noticed that you said that you can only personally approve $100,000 without taking a loan committee. You know, I don't really know. Here's my thing is I'm looking for a $200,000 unsecured line. You can only do 100. You know, I could probably make 100 work. What do you think? Do you think that's something that we could do? And that's how I would phrase it. And then I'd see, and I'd play off what to say. I don't know, Matt, we might not be able to do that out of the gate. Well, what do you think you could do? Well, maybe 75,000. Okay. Well, you know, let's go ahead and go with that. And let's build a relationship and let's see what happens. So I'm leading the conversation. Does that make sense?
Yeah.
Okay. So if you guys did this process and did these questions with, you know, 25 different banks or credit unions, then you might come away with, you know, 250 to 500,000 in lines of credit. Or worst case scenario, you set up banks that you can start doing loans with and buying properties with. What other questions you guys have? Dan asked, do the unsecured lines usually have a variable rate? That's usually they stick a standard rate on it. They'll make the line, they make the line of credit, say it's 100,000. They'll say, hey, this loan is only good for 1 year. Here's the thing, guys, with these unsecured lines, they're not typically 5 or 10-year loans. They're 1 year. So, hey, the loan is 1 year, it's 5%. And this is what it is. That's how they typically do it. What if you have a fair FICO score? Would the bank still work with you? Credit score is important. We can get into a ton of stuff about credit score, and I might do that on another. We've already burnt through almost an hour here today already, guys. And I still, you know, I can still cover more stuff with this. There's a lot to getting bank loans and unsecured lines. But credit score is important. So that's something that you can build quickly if you know what you're doing. It's not hard to build a good credit score, and it's definitely not hard to fix problems on your credit report as long as you know how to go about doing that. So yeah, you want to build up a good credit score. You know, they always say kind of the magic number is like a 720 to 780 credit. You get to that level, and you can basically, you know, get about any loan that you want. You get over 800 and it's just, you name your price and you get that. But there's more to it with these commercial bankers than just credit score. The credit score is just one piece of it. Let's see here. My question is, my dad has a 401k and IRA over 700. Can this be used to get an unsecured line of credit? No, I don't believe you can use those. I don't believe you can use that against your IRA. You can't use your IRA for a credit. I'm going to say potentially no. Anything can happen, but a lot of times bankers don't like to use an IRA as collateral because you can't foreclose on an IRA. You can't take an IRA. It's protected. So a lot of times they wouldn't it wouldn't be, you wouldn't be able to do that. See here. Okay, should be clear because it's recorded local. This whole conversation is okay. So, is this whole conversation getting an unsecured line of credit over the phone? Yes, you can have the conversation over the phone. I don't meet a lot of bankers. I mean, I don't do a lot of lunches. I build it up, or I talk through everything with them over the phone. Now, if you want to meet with them, great. But people really aren't meeting that much right now, so it kind of works to your favor. Let's see here. Can you get a traditional loan against or is it cash? I'm not following your question, Tyler. Let's see here. Side, will the unsecured credit show up on your personal account when used, or could it just be attached? So that's business. This would be against your business. So, which brings me to a question. You guys should start an LLC. You guys should start an LLC. If you don't have an LLC, you should start one. And it's a business, for your business. It doesn't have to be an LLC that's the name of your real estate holding company. In fact, you absolutely do not want the name of your business to say, you don't want it to say financial in the name. You don't want it to say holdings in the name. You don't want it to say real estate company in the name. You don't want your LLC to actually state and show that you're a real estate investor. That actually hurts you with the banks. That hurts you when you're getting lines of credit. You want to be a construction company. You want to be something like that. So for example, if you're doing real estate and you have a holding company for real estate, but you're doing fix and flips, you're doing rental properties, whatever, there must be a construction company doing the work. Even if you're the GC, start an LLC in a construction company's name. So like you might have your holding company, but you have a construction company that does the work on the real estate. That name, you could name it whatever, whatever construction. That company will be much more likely to get a loan or an unsecured line than something that says something holdings or something financial, because banks that's an automatic cancel on the approval when you're dealing with lines of credit. So always name it something other than real estate holding company or financials. Okay. Let's see. Is company name Enterprises? Oh, okay. Yes, Enterprises would be fine. So, so any other questions anybody has? Okay. Do you generally recommend investing in lower priced areas to use these strategies of loans? The Boston area and my two biggest hurdles to buying more properties is 2 to 4 families are signing. Yeah. So, it doesn't matter what the price of properties are. The local banks, that's what they loan on. So it doesn't really matter if you're in a really expensive area or a cheaper area. None of that matters. The only time it really matters is if an area got really blasted during a downturn. Sometimes bankers get skiddish on loaning to the areas that really took a hit on equity through maybe the 2008 crisis. So yeah, it doesn't really matter what what the price ranges are. Any other questions from anybody? What do you guys think? Was this hour pretty good?
It was
Not
awesome.
bad?
It was great.
Okay, so
Yeah, it was very
here's
helpful.
Can I
the thing.
add something, Matt?
Yeah.
Okay, so I'm in the process of getting an unsecured loan because I have my IRA in a self-directed IRA and the house was paid off, and the only way that I could do it with Equity Trust was to get an unsecured line of credit, unsecured loan. And I have a great guy if anyone's interested.
Awesome. Yeah, share it for sure. No, that's good. That's good. let's see here. Andrey, did you say you do multiple unsecured lines of credit with multiple banks? Yes, if you want to, you could do this with multiple banks. Typically, you could get smaller. Typically, you should set a goal 25 to 50,000 for these. That's a really good number to start, and you can always build that up over time. But 25 to 50,000, you could go to 5 different banks and do this exact thing. But again, it's better to, if you don't want this to be on your credit report, it's better not to do this in your personal name. This should be done in an LLC that you've created that is a separate entity. Like you can do this in your real estate company, but it's better and more likely to work if it's more of a construction company, because a lot of, for unsecured lines, people got burnt in 2008 on, so many people defaulted that were real estate companies that they just kind of created a little in their approval process. They created an automatic no if you're a real estate company. Cool. Matt, just with the information on banks, this has been worth the investment. Awesome. Well, guess what, you guys? Here's the thing. It's been about an hour, but I'm not even close to being done. So what I'm going to do is I think I'm going to do another session of banks. I'm going to talk credit scores. I'm going to talk how to increase your credit, how to get better credit, how to talk more bank stuff, because we could fill another hour of this. But I'm going to do another session on this. So we'll do a to be continued. What I think, unless you guys don't want me to go any further, if you want to just talk a different subject, it's up to you. I like to do these based on what you guys want to learn. Do you guys want to learn more about this type of thing, or does this not interest you at all? Thumbs up, thumbs down.
The more financing, the better.
More? Okay. So what I'll do is I got to look at my calendar. Friday, Tyler's going to be teaching. He's going to be teaching some CRM stuff. But what I'll do is I'm going to shuffle around the days. And next Wednesday, I'm going to jump back on here, do to be continued another session of banks, and talk about how to increase your credit, how to increase your credit score. My credit score has been as high as an 835. An 850 is perfect. So I know how to get a really high credit score. Tyler that works on my team, I've helped him, at 18, 19 years old, he had no credit when I met him, no credit score. And now he's got like almost an 750, 800 credit score, 770, he told me. So Tyler, I met Tyler, I think 2.5 years ago, he had no credit. He now has a 770. So I can teach you guys how to increase your credit. I can teach you how to get, some cool credit card stuff that you can use for your rehabs that gives you just a ton of lines of credit. I can teach you how to get more unsecured stuff, but there's some more stuff that we probably should go into deeper. And I want to teach you more about some bank stuff too. So let's go ahead. We'll finalize. If there's no other questions for me right now as this moment, we'll go ahead and finish up the session. And then next Wednesday, I'll shuffle out what I was going to talk about, and we'll do another session on banks and credit scores and lines of credit and all that stuff. Does that sound good?
Excellent.
Excellent, yes.
Okay. Any other questions before we cut it off for the day?
I have a question.
Yeah.
So I had someone about a year ago direct me to this company called Funding Bureau, and they go about getting unsecured lines of credit with like a 0% intro rate about it. And I did get a few of those. I was wondering, what's your thoughts about that? Like just to stay away from those credit cards, or is that another option to do it?
Well, what it is they're charging you a fee for every dollar they got for you. They charged you a certain percentage, right?
Oh yeah, I paid a substantial flat fee for a year.
Right.
So, yeah.
Yeah, so you're paying a huge flat fee. I'm teaching you how to do it without the flat fee.
Okay.
So if you follow what I'm going to say, so what I'll do, I'll even go here. I'll tease you guys a little bit. I'll tell you some banks to call for lines of credit next week. How about that? I'll tell you exactly who to go to for fun, unless you guys don't want that part.
Oh, stop it.
I teased Ding there.
All right. So Tyler, make sure we make a note on this. So guys, I was going to do negotiations next week. We're going to do part 2 on Wednesday let me see that real quick, for banks. So Friday, jump on. Tyler's going to talk about tracking leads without a CRM. So a lot of you guys have Podio, which is awesome. Nothing's going to compare. But if you don't have the money to get into Podio, nope. We're going to teach you the next best thing. And then on Monday, I'm going to have my leasing girl that runs my leasing talk about screening and placing tenants. And then Wednesday, I'll jump back on and do more banks. So sound good?
Sounds great.
Yeah.
All right, guys. Well, hey, I will see you. I'm not going to be on Friday. I'll see you next Wednesday. My team will be covering the other days. All right. Talk to you guys soon.
Have a great weekend.
Thank you, Matt.
Yep.
Thank you.